Ladies and gentlemen, good day and welcome to the Emami Ltd Q1 FY2024 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Percy Panthaki from IIFL Securities Limited. Thank you and over to you, sir.
Hi, good afternoon. Welcome to this call for the Emami results. With me I have from the management Mr. Mohan Goenka, Whole-Time Director and Vice Chairman, Mr. Vivek Deel, CEO International Business, Mr. Gulraj Bhatia, President Healthcare Division, Mr. Rajesh Sharma, President Finance and IR. Without further ado, I'd like to hand over the call to Mr. Mohan Goenka, who will take you through the results presentation. Over to you, sir.
Thank you, Percy. And very good afternoon, ladies and gentlemen. Thank you for joining us today. I welcome you all to this conference call on Emami's result for the first quarter of FY2024. Both our consolidated and domestic revenue grew by around 7% in Q1 with domestic volume growth of 3%. The quarter witnessed some sequential recovery in demand for non-summer products with a moderation in inflation. Pain management and healthcare range sprung back to double-digit growth in Q1. Pain management grew by 13% and healthcare range grew by 11%. Boro Plus range grew by 19%. As we have seen, the summer season was affected across the country by unseasonal rains, which impacted sales of our summer products across categories during the quarter. Navratna range was thus impacted by the unseasonal rains and declined by 8%. However, despite the bad season, Dermicool grew by 9% on account of distribution initiatives undertaken by us. Kesh King grew by 2% and male grooming range posted flat growth due to high base. Modern trade and e-commerce continue to perform well, growing by 45% and 47% respectively, increasing their saliency to 19.4% of domestic sales, an increase of 510 basis points against Q1 of last year. International business grew by 8% during the quarter, with a constant currency growth of 11%, led by a strong growth in SAARC, GCC and CIS regions. The quarter also witnessed strong double-digit growth in major brands like Navratna, 7 Oils in 1, Fair and Handsome and Creme 21 in the international markets. With softening of key raw material prices, the quarter witnessed an expansion of gross margin by 240 basis points at 65.4% in this quarter. We increased investments behind our brands with A&P spends going up by 11%. EBITDA at 190 crores grew by 10% with margins at 23%, expanded by 60 basis points. Profit after tax at 138 crores grew by 87% and adjusted PAT at 161 crore also grew by 17% over previous year. Going ahead, we expect a steady recovery in rural demand, fueled by easing of liquidity pressures, forecast of a near normal monsoon and moderation of inflation. Our international business is expected to maintain its growth trajectory to post even better results in the next 9 months. And with further softening of raw material prices, we continue to expect improvement in gross margins going ahead. Our focus will be on driving our long-term strategic priorities, including brand building, we will also continue to invest behind our brands to provide superior value to our customers and are optimistic of our ability to deliver a consistent, responsible and profitable growth in near to long term. With this brief, I now open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use headset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Prakash Kapadia from Innovate Portfolio Managers. Please go ahead.
Couple of questions from my end. Earlier we were under-indexed on modern trade and e-commerce. Now, last few quarters we were growing very rapidly in both of these channels. So, what is driving this growth, and what categories are driving this growth? If you could give us some sense. Secondly, on the rural demand, is the worst over, and can we expect better sales in the coming quarters?
Hi, Prakash. So, Prakash, in modern trade and e-commerce, our base was always very low. So, we entered late into these two channels, but we have been focusing in these channels for the last almost 8 to 10 quarters.
Right.
So that is one of the primary reasons why these channels are showing almost 50-60% growth every quarter. Now that we have reached at almost 20%, I expect these channels to now grow anywhere between 15 to 20%. That's what I expect. All the brands that we sell in the GT are brands which contribute both in e-com and modern trade.
Okay. So it's an across the brand performance, not any specific category or specific brand which is driving.
Yeah, because as I said, we have launched a lot of SKUs exclusively for these channels, which was not there in the past. So some products like Navratna, Kesh King, they may have a 500 ml, which is only available in e-com or modern trade.
Right.
So there, and a lot of exclusive promotions also, which is only related to these channels. So that's one of the key factors that we see the growth in these two channels. Coming to rural, Prakash, I think still there is some challenge. I would not say that all the challenges are behind us. Some markets are slightly better, but we will have to still wait, till the inflation moderates to see long-term growth in the rural markets.
Okay.
Yeah.
And one data keeping question for Rajesh. If I look at depreciation and amortization, it is at 46 crores this quarter as compared to 64 crores last quarter. And this quarter also includes, a 16 crore kind of, write-off which we've taken on Brillare. So what should be the run rate in the medium term from here on?
So, Prakash, I think 45 crores, 50 crores kind of range should be there going ahead. So, amortization last year, first quarter had the Kesh King also, which is no more there. So, 23-24 crores kind of amortization would be there, and 20 odd crores would be there on account of depreciation.
Normal depreciation.
Yeah.
And if I were to look at results, Rajesh, there is no one-off in the base, right? Now everything is comparable. The Dermicool is coming, acquisition is coming. We are comparing like to like, right, on a year-on-year also?
This Helios, the man company, became subsidiary last year in Q2 from July 1.
Okay.
So its numbers are not there in the base quarter.
Okay. That is the only difference. So
Yeah,
Q2 it is like to like.
Right.
Fine. Understood. I'll join back if I have questions. Thank you.
Thank you. Next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi Mohanji, hi Rajesh. Thanks for the opportunity. So we have been doing very well in international business as well. So just wanted to know what is clicking for us in international market, and is it largely territory addition that we are doing, or we are seeing robust repeat purchase also in the core markets for us?
Yeah. So Vivek, would you like to take this?
Yeah, sure. So when you look at our major demand, major growth is coming from the existing markets. So that is where we are growing, and in the current brands, the big brands. So innovations are still being seeded, and they will seed the future growth for us. While we say we are growing in decent double digits in most of the existing markets and brands, we are still facing some issues in terms of currency. So Russia is one area we are facing the currency issues. It has seen sharp depreciation in last 3-4 months. But we have plans for that upcoming. But to answer your question simply, most of the growth is driven from existing markets and existing brands which have become stronger in those regions and geographies.
That is on back of also a strong focus in terms of advertising, very regional focused advertising. Yeah. So that is also now our international business gives good profitability. So our investment also has gone up significantly in the international business. Right. Lot of stability has come in.
And so which will be our top 3 brands in international markets?
Top 3 brands we can share with you. So Navratna remains the largest. Okay. So after that is Fair and Handsome. Okay. Then we have 321, which was acquired brand. That is also very substantial for us. 4th brand which is substantial for us is 7 Oils in One. So that fluctuates between number 3 and number 4 for us in the business. And then BoroPlus is there. Then we have OTC portfolio under different brands of Chandu and Mentho Plus, which also does well for us in various markets.
So this is largely Indian diaspora we are catering to, or brand equities kind of working with locals as well?
So I think you will read our annual reports as well. The Russia CIS business, which is around 11-12% of our total international business, is all non-Indian consumers. Then we talk about, say, Bangladesh. Bangladesh is all non-Indian consumer base. Then we have a decent sale of our OTC in Africa markets, which is also non-Indian consumer base. Then in Southeast Asia, it's a mix of Indian consumer as well as local consumers over there. So Myanmar is largely local consumers, hardly any Indian consumers over there. So within GCC, you will find we have a mix of Indians as well as Arab consumers. So Prem 21 caters largely to our Arab consumers, and Asian brands, our domestic brands cater to the Asian consumers over there. But our brand expansion of Navratna and 7 Oil, the portfolio which goes to the Arabs is also different. So that we don't retail in India. So that also gives us decent market within Arab, including Iraq as well as Egypt. So Egypt unfortunately has been pretty bad for us this particular quarter. San Egypt we have grown by around 20% in constant currency terms in rest of the international markets. So it's a very good mix of international consumers in our portfolio as on date.
Okay. That's very helpful. Mohanji, second and last question is on gross margin tailwinds that you spoke about in your opening remarks, and you said that you will use for strategic priorities. So just wanted to know, will it be largely reinvesting it into ATL, BTL activities? And then how should we think about a margin, EBITDA margin range for FY24?
So Tejas, Mostly it will go in A&P because most of the investments in Project Khoj is completed. So we will be very careful. We will wait and watch how the summer, how the winter pans out to be. If the winter is good, then we will definitely increase A&P by 1%. But overall, despite of that, we expect margins to increase by at least 200-250 basis points.
Okay, that's very helpful. That's all from my side. Thanks a lot.
Thank you. Next question is from the line of Abneesh Roy from Nuvama Institutional Equities. Please go ahead.
Yeah, congrats on good recovery in the non-summers. I have 3 questions. My first question is in terms of the talcum powder, your Dermicool has seen good growth of 9% versus Navratna -8%. The other key player, they said that they have gained market share in this quarter. So I wanted to understand on an overall basis, if I combine both the brands, would you have lost market share? And second is, because Dermicool is growing faster, would you kind of prioritize wherever they are competing? A lot of areas they don't compete, but because it's going faster, would you prioritize that in the coming years?
So Abneesh, as per our data, we haven't lost market shares. Okay. Dermicool, as you know, had come into our fold this quarter. So we really focused wherever there was gaps. If the summer would have been good, the Dermicool growth should have been more than 18 to 20% and not 8%. Okay. Because Navratna talc already has a very huge base. Our Navratna talc sales is almost 170-180 crores in these 3-4 months. Okay. So it was very difficult because of poor summer. We could not do better. But I don't think they cannibalize at all. They don't cannibalize. And each have very distinctive markets. We will keep on focusing both the products.
Right.
Because total, if you would see Dermicool plus Navratna Cool Talc, the sales is almost 300 crores. So these have substantial revenue plus profit, so we can advertise both.
Okay. My second question is, when I see your strategy versus the other key Ayurveda players, 2 things I wanted to ask. One is they are setting up a huge team of around 400 feet on the ground to go to allopathic doctors so that allopathic doctors can recommend the Ayurveda products. Would you also think something similar, and does it work? And second, they have also come out with a cooling hair oil. I understand this has been tried by many players earlier. You have held on really strongly to the market share. So any take on that? Because they claim to have a 15% market share in the areas where they have launched the cooling hair oil.
So I will answer the cooling oil, then I will ask Gulraj to take it on the healthcare. So, Abneesh, what our data, because somewhere I was also reading that the total sales of cooling oil was 5 to 6 crores, you know. So the market size is very large, and 5-6 crores doesn't give 15% market share. We haven't lost even 0.1% market share in the cooling oil. So unfortunately, the season was bad, which you all are aware. If season would have been good, we would have definitely grown on Navratna oil. Our market intelligence shows that there is no pressure in Navratna cooling oil. And on the allopathic doctor coverage, Gulraj, do we have any plans for healthcare to reach to allopathic doctors?
Yeah, so thank you for your question. Like you mentioned, from some of the competitors' perspective, there are a few companies which have been focusing on allopathic doctors or are planning to focus more. In our case, about 1/3 the doctors we cover are allopathic doctors and the rest are Ayurvedic doctors. But since our coverage is less compared to some of our competitors, we believe that if you look at the per doctor sales offtake, we believe that there is still a lot of scope to improve our
both our coverage and the throughput per doctor. And hence, our focus is still going to be on expansion in the Ayurvedic doctor segment, both from a number perspective, coverage perspective, and throughput perspective, because we believe we can gain market share and business through that. So we will continue focusing on 1/3 of the doctors being allopathic, but we do not have immediate plans to expand the allopathic doctor coverage right now or in the coming months.
So last question, so very impressive scale-up of modern trade e-commerce. My specific questions here are, I also see, for example, currently Independence Day, a lot of the quick commerce are running very aggressive campaigns. Are you also very aggressively participating in your categories there? Second is, you are currently almost 19.4% in terms of this contribution. In your categories, what will be the benchmark currently the best player has? So are you already there? And 3 years, 4 years down the line, where do you see this number?
So, Abneesh, wherever there are opportunities, we participate very, very aggressively. There is no doubt. As I said, on e-commerce, we have grown exponentially, almost in the last 4 years from 0 to now 10%. So we have aggressive plan, team is in place, everything is in place. And I also said in my remarks somewhere that now that the bases are 20%, we expect to grow at anywhere between 15-20%, not at 40-45%. So in the next 2-3 years, I think it can reach to about 25-26%. That's what we expect. Some of our peers, the data that we have seen, they are already at 25-26% now. So I think it will stay at 25-26% in the long term.
One very quick follow-up.
Also one more point of this, that this year we have really focused on margins in these two channels, because these channels are growing so fast and these had lesser margins. So this year our focus, has been primarily on expanding margins in modern trade and e-commerce.
What will be the gap in terms of this gap margin? What is the
gap? I can't be very specific, but gap will narrow down substantially this year.
Okay. Thanks. That's all from me.
Yeah.
Thank you. Next question is from the line of Mr. Percy. Please go ahead.
Hi, sir. Congrats on a good set of numbers. Am I audible?
Yeah,
please go ahead.
Yeah. So I just wanted to understand, sir, of course, the summer issues are well known, but apart from the summer issues, your rest of the portfolio has performed very well. So just can you take us through what are the initiatives that you have implemented internally within the organization which has led to this? Of course, there might be some amount of effect from the improving demand scenario for FMCG, but I'm sure that a larger part is due to your own efforts. So if you could just elaborate the programs and the initiatives you have taken which has resulted into this. Thank you.
Yeah. So Percy, absolutely, we have been taking a lot of initiatives, and some of the initiatives are yielding results. One of the key initiatives was, of course, our distribution expansion, the Project Khoj, which led to this kind of a growth. And a lot of analytics that we had done, a lot of bridge packs that we have launched in the last 3 quarters has helped to penetrate much deeper, and also increase in advertising spends. So we reduced some advertising spends in summer, and we increased some advertising spends in the rest of the portfolio. Because as I said, the margins are expanding, so we have good leverage, and so we are getting a little aggressive on A&P. So I think everything is falling in place, what I feel.
Understood, sir.
Confidence also, once you get numbers, you get confidence, so market also responds. It's a cycle.
Understood, sir. On the distribution part, can you give us some data? How many outlets do you have under direct coverage now?
It is almost 10 lakh outlets per year.
And your plans here over the next 12 months and 24 months?
So, Percy, we are done with Project Khoj. We have completed the target which we started 2 years back in everywhere, whether it was e-com, modern trade, chemist outlets, rural coverage, and direct distribution. Now, the next key challenge is to increase throughput from these outlets. That is what is the next goal.
Right, sir. And anything you would like to sort of elaborate on that in terms of how do you plan to do that in terms of the throughput per store increases?
That would be majorly through trade marketing initiatives. So identifying the core outlets and giving more, trade inputs in certain outlets. So that is through a lot of analytics that we are doing.
Right, sir. Coming to the product portfolio, can you let us know what are your thoughts on innovation and what is the mix you are targeting of the growth from innovations versus the existing products that you have?
Yeah. So this quarter also, Percy, I think through innovation we got a revenue of around 2.5%. And for the whole year, it should be in the range of about 3%.
And here, how do you define innovation? Products launched in the last 12 months, 24 months, or some other definition?
Products launched in the last 2 years.
24 months. Okay. Yeah, that's all from me, sir. I'll come back later on in the queue if required. Thanks.
Okay, Percy.
Thank you. Before we move to the next question, reminder to the participant, anyone who wishes to ask a question may press star and 1. Next question is from the line of Shirish Pardeshi from Centrum Broking Limited. Please go ahead.
Hi, good evening, Mohanji. Thanks for the opportunity. Sir, to start with, we have seen there a lot of action in the Kesh King portfolio. We have now had shampoos and now we have added organic range of shampoos and we have done onion shampoo also. So just wanted to understand in medium to long term, how are you looking at Kesh King portfolio and what are our targets? I mean, though we have taken some action in terms of activation and new product launches, but the sales has grown only 2%. So, of course, this new launches will take some time to stabilize. But if I say that in 24 and 25, what are the growth rates you are anticipating in this portfolio?
So, Shirish, we expect more action coming in from shampoo and the organics range. Our investments also are increasing more in the shampoo and on the new range. So we expect Kesh King on an overall basis for the next 2-3 years to grow at around 7-8%. That's what we expect. Quarterly numbers are very difficult, to give because of sometimes high base. Consumer promotions makes a lot of difference in this portfolio. Markets also, Shirish, you must appreciate because of an expensive oil and the consumers are primarily mass consumers. So there was a little bit of, offtake issues for oil because the price is 160-170 rupees for 100 ml. So if market also stabilizes, we may see better growth, but shampoo should yield better results than the oil. At least that's what we feel.
So do you think shampoo would contribute now from 25-30% to 50% of sales?
That may take some time, Shirish, but yes, shampoo, because market is also very large and we are seeing good traction even in tough times. So shampoo contribution would increase continuously.
So just one question here. This organic range is priced premium to your erstwhile shampoo portfolio, or is it similar price?
No, it is much premium.
Okay. My second question is on the BoroPlus. Though this quarter we have seen a very strong sales, despite BoroPlus season is not there. So I just wanted to understand, is it that filling pipeline we have got because of the new product extension, or there is a core portfolio also looking up?
No, this quarter, Shirish, BoroPlus contribution is very, very low. On a total sales of BoroPlus range would be hardly anything. So this growth has got not meaning. Thoda sa in this quarter, most of the growth has come from BoroPlus soap,
Okay.
Okay. But otherwise, overall contribution is minuscule.
My third question is on the healthcare range. Though we have the base which is coming in and normalizing, 11% growth is good growth. But just wanted to understand a little more deep dive, if you can split what is the ethical OTC and the expansion in terms of other products what we have done in the last quarter. So maybe wanted to understand the qualitative, what are the things which are working and what is not working, or is there some more work which to be done? I mean, obviously we have understood that there is focus on expanding the doctor coverage. And I think last 2-3 quarters we have been talking. So in that journey, where we are and what are the growth rates we can expect for the rest of the year?
So, Gulraj?
Yes, Mr. Praditi, thank you for your question. So we have been focusing on all the three businesses over the last couple of quarters. In OTC, as you know, we've had the challenge of high base during COVID on many of our products which are health supplements or immunity-led. So we've been focusing on other segments such as vitality products, digestives, and other health supplements which are not dependent purely on season or during the COVID period. And we are seeing some results in some of the categories in the OTC range. We are also doing much more aggressive advertising in some of the focus categories which we believe can do much better in the coming quarters. As far as the medical business is concerned, we are purely focusing on market share gain in certain product segments and certain geographies where we are under leverage or under index today. And it will come both through organic expansion in the current set of retail outlets and doctors we go to, and through both doctor additions and outlet additions. We've also seen a good sales ramp up in the D2C business, which is Janducare.com, where our focus is not so much on the legacy products, but on launching digital-first products. And we will continue focusing on launching in the coming quarters these products. As you would probably appreciate, the costs of marketing have gone up in the last few quarters in e-com because of number of players having come in across categories, not just limited to healthcare. And hence, we are cognizant of making sure that we get the best ROI on what we do. We are also trying to leverage not only Janducare.com but other online marketplaces and also some of the modern trade channels where we believe we can scale up.
So, suffice to say, the digital contribution would be now plus 10%?
When you refer to digital, you're referring to the e-com?
Yeah, I'm saying you said that there is an incremental focus with your own website, Jandu Online and plus other. So, what would be the non-GT or non-traditional contribution?
So, on the digital side, it would be in the region of around 10%.
Okay.
And we believe that will keep scaling up.
Okay. Mohanji, my next question, second last question, in fact, on the D2C, you have not spoken anything. So could you share something about Canis Lupus and TMC?
Yes, so these two companies are also doing very well on the Helios and this. They have grown. So their growth in this quarter has been almost 27%, you know. So TMC is now break-even in this quarter. There is no negative EBITDA. And so I think both the companies, you know, where we have invested are doing as per our targets.
But what would be the sales contribution in this quarter?
Sales contribution in this quarter?
Yeah. And maybe if you can say that in this year.
In this year, it should be around 4% total. Yeah, around 4 to 5%.
Okay. Thank you. And my last question on any update you could share on the hospital?
So, Sirish, on the hospital front, we are very optimistic that the transaction should be completed by this month end.
Okay.
Yeah.
So it is going as per plan, or is there some twist?
No, there is no twist at all. Why would there be any twist? It is as per plan.
No, we as a...
because it is at the government level, we will have to wait. So, but we are very optimistic that month end it should complete.
Sure. Thank you. And all the best.
Thank you.
Thank you. Ladies and gentlemen, to ask question, you may press star and 1. Next question is from the line of Gaurav Jugani from Axis Capital Limited. Please go ahead.
Thank you for the opportunity, sir. Sir, my first question is with regards to the follow-up to the previous participant's question. So once this hospital transaction is being done, will the entire pledge go away, or still there will be some pledge left after that?
So Gaurav, no, post this transaction, complete pledge will not go away. It should be in the range of about 18 to 20%, depending on the share price.
Okay. And so the next question
is... it is at 33%.
Right. Sure, sir. Sir, my next question is with regards to, again, the MAT credit entitlement. It shows some balance of around 300 odd crores as on June 23. So how should we, build in this MAT credit entitlements going ahead, and what could be the quarterly run rate that we could see still going ahead?
So, Gaurav, we would be generating MAT credit till FY26 when our Pacharia plant is enjoying some tax benefits. So from FY27 onwards, we would start utilizing the MAT credit.
So, sir, what could be the annual run rate for this MAT credit reversal that we might receive?
Run rate of
the tax rate, what could be the tax rate rather until FY26 for the company?
So till FY26, it is difficult to comment on the quantum of MAT credit we will be generating because of the taxability of the various units, but I think conservatively 10% kind of tax rate we can build in, so it should be around that only.
10% until FY26, right?
Yeah.
Okay. And sir, the third question, is with regards to this strong growth we have seen in the modern trade and e-commerce, but at the same time, the overall company growth rates have not matched the rates that we are seeing. So, which clearly indicates, that in the GT, the growths have declined. So, any particular reason that you would highlight, why these growths have declined in the GT channel, and what steps are you taking to revive these growths?
Yeah. So, Gaurav, GT, it has not declined. It is flat. Primarily, the decline is due to the summer portfolio. Our summer portfolio in this quarter contributes almost 41%. Okay. And Navratna Sachets, which is primarily a GT brand, that has declined. So that is the only reason why GT has not performed so well.
So, but if we even take out Navratna also, I mean the other portfolios like Kesh King, even the man portfolio, not the man portfolio, the male grooming portfolio rather, that is also kind of remained flat. And I think male grooming, we have kind of tried to relaunch it multiple times, but still, the growth has been eluding there. plus Case King performance always remains patchy here and there. So, how should one build growth rates on a steady state basis? Because even if I see the growth is largely, driven by the Helios and the TNC. So, what kind of growth rates should one build going ahead on a steady state basis?
So, Gaurav, particularly the male grooming, last year we had a very high base for the first 4 months. That is one of the key reasons why the male grooming is flat. But going forward, we are very confident of double-digit growth in the male grooming portfolio. You would see this from the Q2 onwards. Okay. And in Case King, as I said, oil is a little bit under stress because of lower offtake, particularly for the mass consumers. But shampoo is doing well. Shampoo has grown. Unfortunately, oil has not grown. So we will just have to wait till the market recovers as far as the oil is concerned. But we are also spending a lot on shampoo.
Sure, sir. Thank you. That's all.
Thank you. Next question is from the line of Mr. Percy Patanki from IIFL Securities. Please go ahead.
Hello.
Yeah, Percy.
Yeah. Sir, just trying to get the construct of your growth over the medium term, let's say over next 2 to 3 years. I think you would be targeting around a 10% kind of a sales growth. And you mentioned in response to an earlier question that Case King would be about 7 to 8% kind of a growth. So would you help me in understanding, if not, I'm not looking for exact numbers, but where do you think that, which are the categories and brands which can grow higher than the company average of 10% and which are the brands which will grow lower than the company average of 10%?
So, Percy, to international business, we expect to grow at about 15% in the long term. That is one. Secondly, male grooming, I'm very confident from Q2 it should be a double digit. Healthcare, which is roughly about 10-12% contribution, should also do double digit growth. A lot will depend on summer-winter portfolios. If summer-winter, if one of the seasons are good or both the seasons are good, then I'm also confident that Boro plus Navratna should do anywhere between 6 to 8% growth. So, by and large, I don't see a big challenge, in getting 8 to 10% growth in medium to long term.
Okay.
And we are also spending a lot more on A&P, expanded our distribution channel also. So everything should yield results. Markets, please understand, rural has not yet recovered. So once the rural recovery comes in, that should also benefit.
Right. On margins, you mentioned a 200 to 250 basis points expansion. You were talking about gross margin or EBITDA margin?
EBITDA margins.
And this is full year FY24 on a YOY basis?
Yeah. At least अभी के basis में तो यही लग रहा है.
Right. So like FY23 was close to 25.5. So at least 27.5 is what you are expecting.
Yeah.
Okay, sir. Okay. That's all from me.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Next question is from the line of Abhijit Kundu from Antique Stock Broking. Please go ahead.
Yeah, thanks for the opportunity. My question was primarily on, what are you doing to de-seasonalize the portfolio? Because, for a very long time we have been seeing that there are these vagaries of, seasons and there are problems. And those problems are very evident. So what are we doing to de-seasonalize the portfolio? And is there a thought process that over a period of time 3 years, 5 years, whatever it is, to de-seasonalize the portfolio and a certain percentage of sales, come from a portfolio which is not dependent on season? Because a lot of companies are facing this problem, particularly in consumer sector. So just wanted your thought on that.
So Abhijit, we don't have any plan to de-seasonalize our portfolio. Rather, if you have seen, we have acquired Dermicool, which is again a seasonal brand. We don't look at anything, We look from the consumer lens wherever there are gaps, and we find that there are opportunities where we can fill in those gaps and make money. That's where we focus in. So idea is not to look at seasonalized or non-seasonal products.
Okay, got it. That's it to my side. Thanks.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. Participants, to ask a question, you may press star and 1. Next question is from the line of Aishwarya from iThought Advisories. Please go ahead.
Hello.
Yes, you are audible. Please go ahead.
Yeah, thank you. I wanted to ask that Emami has increasingly acquired new companies like TMC and all that. If I can please get a breakup of the sales.
Breakup of sales of TMC?
Yeah, TMC and True Native and all that.
Hello, Aishwarya. Yeah, as Mohanji mentioned in earlier query that TMC and Brilliant would be contributing roughly 4 to 5% of revenues this year.
Right.
As already mentioned, yeah.
Okay. Any estimates for the long term, sir?
So,
Surely it is difficult to comment on acquisitions. The TMC is growing faster, but on an overall basis, range यही रहेगा 5% के आसपास.
Thank you, sir.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. As there are no further questions from the participants, I now hand the conference over to management for the closing comments.
Thank you all the participants for joining us today for our Q1 results conference call. Thank you, IIFL, for arranging this. Thank you. Have a good day ahead.
Thank you.
Thank you.
On behalf of IIFL Securities Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.